Morning to you. This is Business News coming to you live from our Rayfield studio. My name is Kerman Gukas. On the news this morning, the Nigerian Naira maintained a steady yet cautious position against the US dollar as the market opened for trading today, Tuesday, April 28, 2028. Financial analysts are observing localized fluctuations in liquidity across both the official Nigerian foreign exchange market (NFEM) and the parallel market segments. In the early trading hours of the official window, the Naira showed resilience, trading at approximately 1,360.19 Naira of the US dollar. This follows minor adjustments as the FMDQ Securities Exchange records ongoing transactions from institutional buyers and sellers. The rate has seen slight volatility since the market opened, moving from an initial 1,359.23 NGN to its current level and also daily equilibrium. The Central Bank of Nigeria continues to monitor the official window closely, ensuring that the transparency of the unwilling buyer, willing seller model supports price discovery while mitigating drastic shocks to the local currency. The informal parallel market continues to operate at a premium, reflecting the immediate retail demand for the greenback. In major cities such as Lagos, Kano, and Port Harcourt, currency dealers are quoting the dollar between 1,480 NGN and 1,495 NGN. The gap between the NFEM and the parallel market remains a focal point for economic observers, as it often indicates the level of unmet demand in the official sectors. Traders in the parallel market suggest that small-scale importers and individual travelers are the primary drivers of the current activity in the informal sector this morning. Today's market performance is being influenced by several key macroeconomic factors. Global oil prices remain a significant driver, providing the necessary foreign exchange reserves to support the Naira. Now, the federal government has disclosed that over 80% of women-owned businesses in Nigeria operate without access to formal credit, limiting their ability to scale and contribute optimally to economic growth. The Minister of Women Affairs and Social Development, Hajia Iman Suleiman Ibrahim, made the disclosure on Monday in Abuja at the grand finale of the Give to Gain Summit to mark the 2026 International Women's Month. Suleiman Ibrahim said although women account for over 50% of Nigeria's population and contribute more than 40% of the agricultural labor force, they remain largely excluded from access to finance, land, and structured economic opportunities. According to her, most women-led enterprises are concentrated in the informal sector, underscoring the need for targeted interventions to expand access to credit and markets. Also speaking at the event, the Director General of the Securities and Exchange Commission, SEC, Dr. Emomotimi Agama, represented by Executive Commissioner Operations, Mr. Bola Ajomale, emphasized the need to integrate women more fully in Nigeria's capital market as a pathway to building wealth and driving long-term economic growth. He said while Nigerian women are highly active economically, owning about 41% of micro businesses and numbering an estimated 23 million entrepreneurs, they remain largely excluded from capital market instruments that enable wealth creation and business expansion. According to him, the challenge is not whether women are economically active, but whether they are able to transition from earning income to building lasting wealth through asset ownership and investment. Agama noted that although financial inclusion among women improved to 70% in 2023, the gender gap has widened, indicating that progress for women is slower compared to the general population. He further stressed the regional disparities, with higher levels of financial inclusion in northern Nigeria, particularly among women, farmers, and dependents. The Nigerian Exchange Limited concluded the trading week that ended 24 April 2024 on a significantly bullish note as total investor wealth surged by 5.5 trillion naira, representing a 3.94% appreciation in market capitalization. This rally, which pushed the total market value to a historic 145,335 trillion naira, occurred despite persistent macroeconomic headwinds and inflationary pressures that have characterized the broader economy. The benchmark all-share index mirrored this growth, climbing to a close of 225,722.49 points, up from the previous week's position. Market activity witnessed a substantial uptick as a total turnover of 3.805 billion shares worth 213.955 billion naira exchanged hands in 297.202 deals. This performance surpassed the previous week's total of 3.588 billion shares valued at 195.313 billion naira, signaling a robust appetite among domestic and institutional investors. The financial services industry remained the primary driver of market volume, accounting for 2.739 billion shares valued at 106.269 billion naira. This sector alone contributed significantly 72% to the total equity turnover volume, led by intensive trading in the shares of Access Holdings plc, United Bank for Africa plc, and First Hold Company plc, which collectively bolstered the index. Corporate actions also took center stage during the week, highlighted by a major capital raising move from Dangote Sugar Refinery plc. The company has formally applied for a rights issue of over 8.09 billion ordinary shares at 60.00 naira per share. This strategic move, offered on the basis of 2 new shares for every 3 existing shares held, is expected to significantly deepen the consumer goods sector liquidity once finalized. Additionally, the debt market expanded with the listing of Cure Industries plc's 13.45 billion naira Series 6 commercial paper and Coleman Technical Industries massive dual series issuance totaling over 66 billion naira, providing sophisticated investors with diversified fixed income options. Meantime, the livestock sector may be on the cusp of transformation as stakeholders rally behind a private sector-led investment drive capable of unlocking up to $3 billion in pastoral market opportunities over the next 3 to 5 years. The renewed push comes amid growing consensus among government and industry players on the need for urgent reforms to address long-standing structural bottlenecks that have constrained growth. The investment drive took center stage at a 3-day high-level forum in Abuja, where producers, financiers, and policy makers convened to negotiate deals, forge supply agreements, and rebuild trust across a fragmented value chain. The event, organized by the Africa Union Inter-African Bureau for Animal Resources through its Africa Pastoral Markets Development Platform, is part of a 4-year initiative supported by the Gates Foundation to transform pastoral economies into market-driven, inclusive, and resilient systems. Speaking at the forum, Director Livestock Extension and Business Development, Federal Ministry of Livestock Development, Shekamang Ayuba, noted that Nigeria holds West Africa's largest livestock population, with about 54 million cattle and 250 million poultry birds. The sector, according to him, supports the livelihoods of an estimated 75 million households and contributes roughly 5% of gross domestic product, valued at about $32 billion. Despite this scale, he observed that Nigeria still imports about 60% of its dairy needs, underscoring deep inefficiencies across the value chain. He explained that the gap between potential and performance is most evident in productivity. Ayuba added that the government has begun laying the groundwork for transformation through a mix of policy frameworks and targeted investments. He pointed to the National Livestock Master Plan, developed with support from the Livestock Productivity and Resilience Support Project, the International Livestock Research Institute, and the Gates Foundation as a comprehensive blueprint addressing systematic constraints from feed supply to animal health and market access. Now, Nigeria may be losing about 674 billion annually to foreign paper mills as the domestic primary producers closed shops over the past 26 years. The development indicates a near total collapse of the sector, even as the contribution to gross domestic product (GDP) is stuck at a marginal 0.14%. Vanguard findings highlight a widening structural gap between demand and local capacity, positioning Nigeria as one of Africa's largest paper consumers but weakest producers. Data obtained from the National Bureau of Statistics (NBS) revealed that Nigeria's paper imports mill has risen sharply over the past 5 years, climbing from 328.9 billion in 2021 to 1.11 trillion in 2025, driven by rising demand for printing, packaging, and sanitary paper products, while local production has dwindled. Consequently, the situation led to ballooning of imports, with the 5-year figure at over 3.37 trillion, as 2025 accounted for the highest annual figure. By contrast, exports remain negligible, rising modestly from 2.17 billion in 2021 to 19.6 billion in 2025, a fraction of import volumes. A breakdown of the NBS data shows that the value of imported paper products in 2021 amounted to 328.9 billion, 412.2 billion in 2022, 573 billion in 2023, 948.2 billion in 2024, and 1.107 trillion in 2025. Conversely, the value of exports within the period was 2.17 billion in 2021, 2.62 billion in 2022, 3.95 billion in 2023, 8.76 billion in 2024, and 19.6 billion in 2025. Analysts contribute the widening gap to the collapse of domestic production capacity, with local manufacturers meeting less than 10% of national demand, estimated at over 3 million metric tons annually. Nigeria was once positioned to become a major paper producer in Africa. The country established 3 large paper mills between the late 1960s and 1980s. Nigerian Paper Mill (NPM) in Jeba, Kwara State, Iwopin Pulp and Paper Company in Ogun State, and Nigeria Newsprint Manufacturing Company (NNMC) in Oku Iboku, Akwa Ibom State. And that is a wrap on business news. Do remember to stay tuned for News Track at 2 p.m. as well as Global News at 6:30 p.m. Thanks for watching.